things that people don't consider when they buy a home, or maybe they never thought about before, was how expensive it really is. So Ted's here from Huntington Bank to help us kind of unravel that to some degree. We have seen Ted's programs in the works. We've worked with Ted on several deals, and certainly look forward to the next one. So, Ted, if you don't mind, if you have anything you want to say, and just take off, but always keep in mind, I always interrupt people, so be prepared for me stopping you midstream. So, welcome. We're glad you're here.
Thank you. Thank you. No, very happy to be here, and thank you for the kind words. I'm looking forward to this. I wish we could do this every week, because I think there's such a need for this. And I can't tell how many people are on, but even if there's one person on, you're going to gain so much knowledge from this that other people do not have. And it's so valuable, because so many times, in fact, I read something last week and it said, if people compare two lenders, so just two lenders, you typically save $1,500 in costs.
Yeah.
And if you compare 5 lenders, you can typically save somewhere around $3,000 in cost. And it doesn't mean that the last one is the best. All it means is you got to take a look,
right?
Because although there are more rules in the lending arena now, this is year number. We won't go that far. A lot of years. But anyway, rules were sort of lax years ago, and they've tightened down, and I think it's such a good thing, because now when you go to closing, you have to know what that final number is 3 days prior to closing.
Yeah. And
if there's any major changes, many times the lender has to pick up those costs. Whereas years ago, it was a shame, because there were, and not in the banking arena so much as in the broker arena, but you would hear stories of people going to closing and the numbers were nowhere near what they expected. And it was terrible.
Yeah. And that's a great point. I mean, people would go to closing, and that might be the first time they've seen the final numbers. And the concern for me, of course, was for first-time home buyers. They don't want to say anything because they don't want to sound stupid. That they're afraid of looking like they don't know, or people would poo-poo them and say, "You first-time home buyers, you don't know that these things change." So that's a great point. There's some things that have improved, and certainly getting those numbers ahead of time give consumers the chance to review that and ask questions about the numbers that they're getting ready to sign. So great point, Ted. That's a good one.
Thank you. And yeah, I guess one of the main things, like you just said, don't be afraid to ask questions. Don't be afraid to question your lender. They should be able to explain everything to you.
Yeah.
I've been with Huntington a long time, but this is actually my second year I do strictly community lending. So, and I love it. It's many, many moons of doing regular lending. And I have to tell you that all I do now is work with first-time home buyers, with low to moderate income families, whether it's coaching them or guiding them or getting them ready to purchase now, or maybe 5 years down the road. I love it. I have gotten more videos from my clients in the last 2 years of them putting the key in the door and turning the handle, and it's warming to the heart.
Right,
and I love it. And it's what I've always wanted to do. I can't believe I didn't do it the first 38 years.
There you go.
But anyway, so we only have an hour, so I do want to get into the closing costs. And I provided Jonathan. I don't know if you guys can bring up by chance, can you bring up the loan estimate I had sent?
See if we can get that up here for you, Ted.
And this is a great form that they're going to work on bringing up here, because it's legally what you will receive. This is one of my clients that closed, maybe November or December. Naturally, you can't see the name or anything, but it's one of my clients that closed, and it's their actual loan estimate, which is what you receive when you apply for a mortgage. There we go. I think that might be the last page. And that's the closing disclosure. Did you want to do the loan estimate first, or if you can?
Yeah.
Closing disclosure is what you get before closing. The loan estimate is what you get when you first apply. So be aware of those two figures and those two forms because they're very, very, very important. Excellent. There it is. Okay. Very good. All right. So, and again, I guess if anybody raises their hand, or Jonathan, you can stop me, or you know, if people have questions or anything.
Good.
But the loan estimate, this was a loan, like I said, I believe we closed it in December. And the sales price you can see at the top left-hand side, the sales price on this particular home was $85,000. And the loan amount was $82,450. So we had a 3% down payment. On this particular program, the rate was 4.25%. And that may look bad to you, but as I go, I'll explain a little bit as to why. And you can see the principal and interest payment, $405.60 would be the principal and interest payment. And then a little further down, you can see the estimate for the escrow account, which would be your taxes and your homeowner's insurance. And sometimes there's private mortgage insurance mixed in there as well. In this particular case, on this particular program, which is sort of nice, no private mortgage insurance. So usually there's a trade-off, no private mortgage insurance, a little bit higher rate, private mortgage insurance, a little bit lower rate. And it's a good idea to compare the two. And I do that for my clients because many times you will see, even if the rate was 3.25%, this payment comes out lower because of the mortgage insurance. So again, just because you're seeing a rate, understand everything that you're looking at before you decide what works best for you.
Right. So remind
Yes,
people
sir.
what private mortgage insurance does, Ted. Help them understand what that fee gets.
Nope, good point. Private mortgage insurance is required when you have less than 20% equity on a conventional loan. And on FHA loans, it's required on all loans, no matter how much you put down. And on FHA loans, the big difference between the two, FHA loans, it stays on for the life of the loan, that monthly payment, whereas on conventional, it automatically drops off when you get to 78% loan to value. You can apply to have it drop off if you've made your payments on time when you get to 80% of the value.
So, and private mortgage insurance protects the lender. So the borrower pays a monthly premium for an insurance that maybe I would change it to be called foreclosure insurance.
Yes.
So that in the event that you can't pay for the mortgage and you go into foreclosure, that mortgage insurance pays for all those things like getting the sheriff to come and get you out of the home, gets the realtor, to remarket the property, to cut the grass, to winterize the property. So that's what private mortgage insurance does. And some of the programs that TED offers don't have that mortgage insurance. So as a consumer, I'm not sad if I don't pay that because it really doesn't, selfishly, it doesn't protect me. It protects the lender. So to not have that, I see is certainly a win. And that might be a good reason why someone would want to talk to you, Ted, at Huntington, to see if that's something that they can take advantage of.
Right. No, I agree. I think there's plenty of options where sometimes it's good to pay that. Mm-hmm. And then sometimes, it's like, you're better off to stay away from it. So again, it's something I try to at least look at and get ideas from my borrowers. How long do you plan on staying in the house?
Yep.
How much money do we need up front? Does it make a difference whether we pay that or not? And the monthly payment, is it in line with where you want to be? So if we look at page 2, which would be the closing cost details, I just want to sort of I'm sorry, go ahead.
It's on the left side of the page there.
Yes, thank you. And I just want to step through that a little bit and give you an idea on maybe what those words mean, because again, section A that you're seeing there, it says origination charges. And origination charges, you'll see those vary from lender and lender, and that's probably one of the biggest pieces of the puzzle to, okay, how much am I really paying for this lender to do my loan?
Yeah.
I know in Huntington's case, you can see our administrative, our doc prep, our processing, and our underwriting are all lumped together.
Yep.
And they're a total of $1,152.50 is what our actual total is. So you'll see you'll see lenders, you'll see all kind of words in there. They're not always going to read the same, but they're always going to be lumped under that origination part. So it may say, they could say anything.
Yep.
But it's how much is that lender charging you to do that loan. Many of these other costs, as we go through it, you'll see that those would be very similar from lender to lender. But this particular one, as far as administrative fees, are they negotiable? And yes, I believe they are. Now, if somebody comes into Huntington, banks really can't do as much as what brokers can do. With Huntington, and I'm just using my company because I know what we do, we can't move on those, because if we move for one person and not another, we're going to be in big trouble. So those are our solid fees. We set those usually each year, and we can't really move off of those. And in fact, even on interest rates, when I quote my client a rate, this is one of the big changes for before that I really like. It's the same for every person that's in that, that has that particular credit score, that's using that particular program, that has that size of down payment. It doesn't vary from person to person. It stays the same. But on brokers, because they have, some options, again, some good options. I have some friends that do that business and they do a good job in what they do, but they're a little more flexible sometimes in rates and fees, and it's a little different arena. As far as one other line item you could see in there that makes a difference, called an origination fee. And I'm sure people may have heard of that terminology if you've looked at different lenders or you read a little bit of information on mortgages, because an origination fee, once again, would be lumped into that origination charge. And once again, it's a fee for preparing that loan, for documenting, for doing the work that they are doing. And a lot of lenders will tell you, look, I charge 1%. That's okay. I mean, if that's what they have to charge. But the nice part is when you receive one of these loan estimates, like if I send it to you today, you have the opportunity to go out and compare it with other lenders. And I believe you have 3 days to let that lender know what you want to do that way before we can start the process. And I think it's many times lenders will send out what's called a cost estimate, a payment and cost estimate. I do that too. It's just gives people an idea. It's not a legal loan estimate. It's a cost estimate. And it gives you an idea of the same costs. You would see the same wording, but it can change because you're not locked in. Sometimes we haven't even run credit. We're just trying to give people a general idea as to what the costs would be.
Yep.
So when you know the difference between when you see a payment and cost estimate and when you see a legal loan estimate. Any questions from anyone on that origination part? Okay. And in that part too, you could see what's called discount points. And many of you may have heard of people in the mortgage industry talking about points. And points are not necessarily, everybody seems to get, to not like to hear that word points. Not necessarily a bad thing, because those points are different than an origination fee. Origination fee is a fee that you pay for somebody to do your loan. Points, you're buying down your interest rate, typically 0.25% for every point that you pay. So again, depending on one, how much money you're working with, two, what kind of difference does it make in your payment, and three, what's the break-even period? And I usually calculate those out for my borrowers and say, look, if you want to buy 1 point, it'll cost you an extra. In this case, it would have cost her about $830 to buy a point. How much of a difference would it have made in her payment? Maybe $10. So her break-even period might have been, 7 years for her to break even. So you have to at least have an idea, what's your break even? How long do you plan on staying in that home? And how much money are you working with?
Yeah, great point. So you're trading cash today for a lower payment for the life of the loan. So, here in Pittsburgh, we live in our houses forever. So if you had the means, it may make great sense for you to make that trade up front, because after that 80 months, now you're putting $10 extra in your pocket. So great point on the points there, Ted.
Yes, absolutely. Yeah, when you're putting money back in your pocket, you can sort of see it over the long run where it does make sense.
Yep.
And again, those are things you can ask your particular lender about if you need those explained. So on section B, you'll see it says services you cannot shop for. And you see that everything listed from appraisal fee all the way down to tax service fee.
Yeah.
Appraisal fee, again, lenders use, I'm going to lump the first two together. There's appraisal fee and there's appraiser management service fee. There's been a lot of reform to appraisals because there was so much fraud years ago that now there's an appraisal management team that actually has to order the appraisals. You would know who the appraiser is before the lender does. We are not allowed to know who the appraiser is until after that appraisal is back. So there's no contact with the lender at all. And that appraisal management service fee, you can see, at least with Huntington, it's $15. But it's basically you're paying somebody to oversee the process.
So what would happen in the old days, Ted, is that I would order my own appraisals. I would send the order directly, and that's where the problem was, is that then you would tell the appraiser what you needed, and they would come and try to get that number. This way, you're very disinterested. He's not reporting. He doesn't know Ted George. He's not built a relationship with you. He sends his stuff back to the appraisal management team. So there's a real clear line from having any influence on what his end number is going to be. So yeah, that was a great change that happened out of the 2008 housing crisis. Yeah.
Yes, so many good, again, I know a lot of people, at least in my world, complain about all the rules and regs, but you know what? It's, as far as I'm concerned, it's all good because now it's very transparent as to what's going on. And that's the way it should have been.
Yeah, I agree.
So one other thing I want to throw out on the appraisal fee, you see on Huntington's conventional loans, they're $450. You'll see those all over the board. So again, important to get an idea, and do you pay it up front? There's some lenders that have to collect for the appraisal up front. Huntington does not. We do not collect on any of our purchases up front. And if for some reason that deal would go south, we don't come back after you after that, for that appraisal cost. I think that's one of the good things I think we do, because at least you're not losing. It's tough to lose $500 for an appraisal.
Absolutely.
And more than likely by then you did a home inspection, so you probably lost another $400.
Yep.
So again, something to keep an eye on there. The other items listed, credit report, and I'm sure a lot of lenders are this way, credit report, data verification, flood zone certificate. The lender chooses those companies that they work with, and those are their fees. Lenders are not stacking money on top of that, to make a couple extra bucks. Whatever these companies charge, the lender has to charge. Can they be different? Yes, depending on who the particular service provider is for those things. A lot of different words there. It sounds like a lot of fees for stuff. It's like data verification fee. What is that? Data verification, there are different types of data on your loan application. And there's a company that actually analyzes the information to look for inconsistencies. Fraud, unfortunately, in the mortgage arena happens. So, there's always somebody sort of looking over the shoulder to verify what the lender's doing. And again, they're watching us more than anybody else. That you provide the documents and, making sure the lenders are putting in what should be there. Flood zone certificate, for example, that comes from FEMA. And that's just, showing us the flood zone. Is the home you're buying in a flood zone or is it not?
If it is, what happens?
That's a good point. If it is, you would be required, the lender would require you to have flood insurance. Mm-hmm. And that can get a little costly.
It can.
So again, something, even if you see a little stream in the back, odds are good you might have flood insurance needed.
Yep. Yep.
So keep an eye out for that stuff. It's great to have water around you, but when it comes time for the mortgage payment, maybe not so much.
Yeah, good point.
Well, one of the ones that always, the MERS. Is anybody familiar with MERS? It's like I wasn't even, I had to Google it because you see these words, and again, in my world, I understand there's certain things. It means, it stands for Mortgage Electronic Registration Systems. And it basically just tracks the transfers and modifications of mortgages. But again, they charge for their services. The lenders require it. So again, you can see another $12 there. The tax and insurance service fee. Those are simply for these agencies. It's a one-time fee. These are just one-time fees that you see here. But these agencies we have to pay to monitor that the taxes are always paid on time and that the homeowner's insurance is always paid on time.
Yeah.
And again,
so it's actually a double check on Huntington Bank, right? It's someone making sure that to tell Huntington, hey, this wasn't paid, which would not be good for Huntington or the borrower. So yeah, that's something you don't want to pay, but it has a great purpose, I guess.
It does. And you'll see as we get a little further along when we start talking about your escrow account, that you can see sort of how much money, especially in Pennsylvania, flows into that escrow account.
Good point.
There's states where, like Pennsylvania, where you pay your taxes ahead, and states like Ohio, you pay them in arrears. Totally different. Closing costs in Ohio, totally different. So it's, these are things you sort of have to pay attention to, but you can see that the lender basically determines total of $625 for those items,
yep.
But the lender determines who they're going to use.
Right.
On section C, which is the next section down, you'll see title, the wording title all the way down the column. And it says services you can shop for. I know a lot of my clients, when they were done, they'll go, wait a second, did I shop for that? I didn't realize I shopped for that. And what happens a lot of time is when you're working with a realtor, a lot of times the realtor will suggest or ask if you have somebody in mind for the closing. And most people, some people have somebody in mind, some people don't. And if you don't, they'll usually suggest somebody to use, and they provide the title services. And there's nothing wrong with that, because most of these title companies, they again have different words the whole way down. You see on this one, you see endorsement fees, the first line. You see a closing fee, a closing protection letter, all different words there. And some of that wording would be the same with different title companies, and some of it would be different, but they're all doing the same service. And the nice part is their job is to search that title. And this is they work for basically you and the bank. You're our client. These title companies are required to go out there and do a title search and make sure that there's no clouds on the title, and nobody has any other claims to the title, and nobody can come back down the road and say, hey, I have a claim to this to your property, and that's why they issue title insurance after they've done all that research.
Yeah.
Yes.
All those, most of those fees are small and miscellaneous. The big one's the actual insurance itself. And, that says lender's policy. So, of course, who does that protect, Ted?
Yes, and you'll see owner's policy a little bit later down the road, but the lender policy, which always is more costly, protects the bank or the lender. Again, in case, same protection that you would receive, clouds on the title, protection against somebody coming back with a claim.
Yeah. One-time fee protects you from the day you buy your home backwards in time.
Correct. And the nice part is that title insurance is the same for every lender in the state.
Insurance is
correct.
Regulated. Correct.
Yes. Yes. So, whether you went to Huntington, whether you went to, FMB or wherever you would go,
should be the same.
That would always be the same.
That's right.
And those various costs in there, Again, you can see, title insurance is the most costly, over half of the total.
That's right.
The one thing that I see can vary is that closing fee.
Yeah. Yeah.
You'll see that all over the board, and I can just tell you this, I've seen other closing fees that are $250, but maybe something like a courier fee was eliminated, or a doc prep fee. So again, you want to look at all those totals. You're not going to see large variations. You might see $100, a couple $100 in there. But you can see also the total of all those, roughly $3,516. We're already, over her down payment.
Yeah. Yep. Yeah.
Any questions on those particular sections?
Pennsylvania is one of the highest closing cost states in the country, right? I mean,
it is shame. And in Ohio, you'll see transfer tax coming up on the next section that we do. It's section E.
Mm-hmm.
But in Ohio, the seller pays the transfer tax and the title insurance. The two biggest costs the seller pays. In Pennsylvania, it's a buyer.
Yep.
Yeah. So that's a little painful. Down the road, as you can see, the taxes, recording fees, transfer taxes. Again, another big number. The transfer tax is a one-time tax paid. 1% of the sales price goes to the state, and the county, which is the rest of it, that can really vary. And I know Jonathan knows how much it can vary.
Yeah, sure.
The city of Pittsburgh is, the state is 1%. The city of Pittsburgh, 4%. Outlying communities, sometimes only 2%. One for the county, one for the state. So you really have to be aware of, how much those transfer tax can change, because that makes a huge difference in how much money out of pocket you have to pay.
Traditionally here it's split between the buyer and the seller. So you would pay half when you go in, and when you sell your home, you'd pay half when you go out. So it's something that cost of ownership, right?
It is, and it's a huge cost. So now we have another $1,200 added on.
Mm-hmm.
And then we get into our section F and G, which is setting up the escrow account. And I know for my clients, when I'm putting together a cost estimate for them, not a loan estimate, but just a cost estimate to give them an idea as to how much money they need, I have to estimate a year's taxes up front and 15 months homeowners insurance. So a year and 3 months of homeowners insurance for upfront money. And you can see in this case again, what do we have there? For prepays, we have $1,069. For the initial escrow account, another $1,200 there.
Yep.
Now you have another $2,200.
Yep.
No wonder people don't try to buy.
Yeah.
You look at all these numbers, and you're going to be amazed when I show you something at the end. But these are things you have to be aware of going in, because if you just had to worry about the down payment, I think most people in Pennsylvania would own a home.
Yep.
And you can see I'm not going to get into too much of the details as far as how the prepaids are set up, but if you know going in that you basically need a full year's property taxes and a 15 months or a year and 3 months of homeowners insurance, you can do the math on that, and it's a big number. And that's why I always tell my clients, be aware of how much your property taxes are.
Yeah. And one of the great time to talk, we pay 3 taxes. We pay a county tax, a school tax, and a local tax. So most places, the county tax is the lowest. Usually the school would be the highest, and then the local borough or township would be in the middle. But we have 3 different taxes that we pay, and this proration helps a little bit see how that's set up.
Yes. Yeah, exactly. And the section H, which is right below that, there's other items that can be in there. And when it says other, what's What does that mean? You can see the owner's title insurance.
That's right.
And that's optional.
Yeah.
Actually, it's optional. It's only $13.
Yeah. I tell people it's not optional. You know, and this is your protection, right? The lender is protected over there at $918. This is your protection. So the 918 is going to protect the bank. It won't protect you. So for $13, you know, you buy it and you'll never need it, but spend the $13 and make sure that you have coverage.
Yep. And that varies depending on your down payment. So if your down payment is more, you'll see a little bit larger cost for that. So it does vary with depending on your size of the down payment.
Yep.
And the endorsements that show there, sometimes there's a gas and oil endorsement. And endorsement just mean it's protection against certain things. This one is a survey deletion. They did not do a survey.
It's a piece of paper, you know, it's a piece of paper that says you didn't do the survey. So we don't endorse that.
Yes. Yep, exactly. And you can see sometimes in there, the realtors will have a realtor administrative fee.
Yep, I've seen that. Yep.
Yes.
$500, $250.
All over the board.
Mm-hmm.
So again, a good question if you are working with a realtor, a good question to ask them as we do it. What's your administrative fee? Again, it is negotiable. I've seen, you know, I'll talk to realtors and say, well, you know, there's occasions where I can waive that.
Yeah.
So again, there's nothing wrong with asking questions. If you don't ask, you know, believe me, they're gonna put it on there, and I've seen them high as $750.
Yeah. And let's remind people that they don't pay the realtor. You know, that usually the seller here in Western Pennsylvania, traditionally the seller pays the realtor. So that would be the one time that you would see a fee for your realtor service. So
yes, and they do. You know, granted, they're busy. They do a good job for you. But just be aware of the fee, because there's still companies out there. Some of the smaller mom and pop, they don't charge a fee,
yep.
And they're doing the same thing. So, you know, again, it's any money that you can save is money back in your pocket.
That's right.
So we add these all together, and you know, the total in the one column, you can see the line below that, E, F, G, and H, comes to about 3680. I'm sorry, 3660. And the total closing costs, I'm going to explain why that's a little different than the left-hand column, but in this particular situation, they add up the cost between the two columns, and then you're going to see what's called a lender credit. I'm going to explain what that is. But your total cost, you can see, is, you know, basically $7,200, you know, in cost to do this loan, and then you have your down payment on top of it.
That's right.
So you add all those together, you're up over $10,000,
mm-hmm.
And that's a lot. You know, that's a lot of money. But let's see how we can whittle it down, because I think this is the exciting part. Besides different grants that are out there that various lenders work with, Huntington does grants with different people. Other lenders have grants with different people. So you want to do a little homework. You know, am I eligible for a grant? What kind of grant? Can the grants be stacked on top of each other?
Yeah.
Most brokers you'll see do not have grant money.
Right.
It's just basically the bank. So you know, be sure to check, because some of them do. They may work with Pennsylvania Housing Finance Agency, and some of the brokers have access to that. But you know, it doesn't hurt. Again, it doesn't hurt to ask. But how do we whittle that $10,000 down? You'll see in that one section is calculating to close. You know what we can do? Why don't we go to the CD? Let's go over to the CD if we can. There we go. All right. This is what I like. You're gonna be amazed. Again, you see this $85,000 sales price. You see the loan amount, the $82,450. This is what you receive at closing. And these are the two things. The loan estimate is the one up front. The closing disclosure is the one you receive at closing, that you have to receive at least 3 days prior to the closing day. So you can see, if you compare the two, you know, the interest rate's the same, the loan amount's the same. the principal and interest is the same. And if you look down a little bit further, you'll see that the escrow account dropped a little bit. It went from, I think we had estimated $200 down to $185. So payment-wise, yeah, it dipped a little bit. It went from $606 down to about $590, which is good. That's a good thing. And sometimes you'll see it go up a little bit. It doesn't always mean it drops, because if somebody chooses a homeowner's insurance provider, that's a little bit more expensive than what we estimated, then that figure could be a little bit higher. And sometimes property taxes, when the certification is done, come back a little bit higher. I know Allegheny County, I believe Allegheny County assesses every time the property's sold. Is that correct, Jonathan?
Well, yeah, when that transfer stamp in my mind is basically telling everyone what you paid for the property. So, there is a formula that goes with it, and I think it's like 87% of the price, and then the county gives you $18,000 off of that. But the school and the local, they don't do that $18,000 off. But yeah, when you buy a home and you pay $82,000, it's hard to argue that it's worth less than that. And you have to be prepared that those taxes could be changed based on that transfer stamp.
Yes, and there's areas, I know Allegheny does that, Beaver doesn't do it that way, Lawrence doesn't do it that way. Washington, I'm not real sure about, but again, it changes from county to county. So sort of be aware of, is there a possibility my taxes will change?
Yep.
But look at the bottom, the cash to close, $408. That's a pretty, it's like, all right, how do we get from, all this $10,000 down, all the way down to 408? So I'm going to show you sort of how that all breaks down. And if we go to the second page, and again, I'm not going to go through all these costs again, because these are the final costs on this second page. And again, like I said, they have to match up with that loan estimate, or if some of the areas have a 10% tolerance and some of them have a 0% tolerance, origination charges with the bank charges. If that changes at all, that bank's paying it. They have to pay it. The services provided
in section C. In section C, you can see it went down. I think it was $1,700 when you estimated it, and it came down to $1,500.
Yes, and you'll see a lot of lenders do that. That's a good point, because a lot of the lenders, when they put this loan estimate out, will automatically estimate a little bit on the high side, because they don't want to get dinged. If they're off, they have to pay for it, and they don't want to pay for it either. So understand too, the numbers could be a little bit high on the loan estimate, but typically they'll come in a little bit lower at closing. As you scroll down, you'll see the same sections that the taxes, the prepaids, setting up the escrow account. And you're going to see what's called a transaction fee in section H. And that's the realtor fee. And if this particular real estate company had a $500 charge. Again, that's what they do. That's, I'm not saying it's bad, but again, it's something you'll see sometimes administrative fee, you'll see sometimes transaction fee, broker's charge, all kind of words, but same thing.
Yep.
And if you go down even a little bit further into section J, this is one of the areas where you'll see why this number's starting to come in a little bit lower. You see a lender credit in there of $3,380, and that's basically Huntington giving you $3,380 towards your closing. That's not a grant. That's not a gift. It's just simply what Huntington does on all FHA loans, all VA loans, and all loans for people that buy in low to moderate income areas. And it's a wonderful thing that we've done for over 10 years. And they added up the millions of dollars that Huntington's done. And this has really helped the people in our communities in Pennsylvania buy homes. And I'm very proud that we continue to do that. And I think we're going to continue doing it for a long, long time. So that's you can see a little bit, okay, we're starting to whittle that number down. So you're going to see another, if we go to the next page, and you will see in section L. Yes. And I think it would be on page 3. There we go.
Yep.
Oh, HRJK. Oh, there we go.
Perfect.
Yes. If there we go. That you can see in section L, already paid on behalf of the borrower at closing. The deposit, that's your hand money. $1,000. The young lady that did this particular loan put $1,000 hand money down on this particular property. So, you know, that's her contribution. And then you see under that section 5, $5,100. That's a seller credit. And again, depending on the product, sometimes the sellers are allowed to contribute up to 6% of the sales price towards your closing costs. And 6% of 85,000, yeah, right around 51. I think it is $5,100.
Yep.
And these are great ways to be able to whittle down that money owed at closing. You could see this young lady got into this house basically for $1,400, an $85,000 house. She got in for $1,400 plus her home inspection. So I think probably less than $2,000.
Can you zoom out just a hair on that one, Ted, so we can kind of look at how this format goes? And all right, so what happens is, you know, you do all the additions, you know, sales price plus costs plus escrow equals that $88,000 number. And then you begin to apply the credit. So that would be your down payment, your loan amount, seller credits. If you paid anything for an appraiser, that's where we would see that credit in there, quite possibly, and just work your way down. So it's really logical. I mean, you do all the pluses and then you do all the subtractions, and you end up with what you need at closing.
Yes, and like I said, this particular form here, this is the one that the lender, you know, I know with my clients, you know, once this comes out, I'll call my clients and go over these numbers with them 3 days before closing, because normally when you go to closing, the lender wants you to bring a cashier's check or a certified check to closing.
Now, help me with that one, Ted, because I tell people to get that certified check made payable to themselves. Is that still the way to do it?
I believe it is. I have title companies that say, don't tell your people that. I tell them anyway, because you know what, in my world, if I have a check made out to me and something happens at that closing table, I have a check made out to me.
That's right.
If it's made out to somebody else, now you got to wait for that person to give your money back. So it's a good point.
They will, but how long and what's I always tell people, what's the pain level for you to get that money back? So that we're old school. That's, and then we hear a lot about wire fraud, you know, becoming more and more prevalent. Is that something you've seen or experienced?
Not yet, no. Thank God, nothing. You know, I'm sure it's happened, but no, I know everybody's. You know, all lenders are very aware of it. All title companies are very aware of it. So, yeah, it is. It's out there, and it's something everybody has to be aware of.
The problem with wire fraud is that once you wire that money, it's nearly impossible to get that money back. So that's why it you know, when you push that button, sometimes that's it, and that's a horrible thing for someone to have to go through.
It is, and you know, I think as an example, in the state of Ohio, where we bring a check to closing, certified check, cashier's check, they have to wire the money to closing.
Oh my, okay.
Before they go. So I mean, I think it's. Get this back up here. There we go. I think it's, again, it might be in that part of our state. I think that we do a good thing. You bring the check to closing, you know what the numbers are. And basically when you go into closing, if you want to sit there and read everything, you certainly can.
Sure.
Nothing wrong with that. But I know normally I try to go over as much as I can before you go to closing. That way you can get in, you can get out, and get on with your life and enjoy your home.
Well, and that's why the 3-day disclosure, getting those numbers ahead of time is so great, because now you can take all the time you want to look at those numbers and make sure that they make sense to you. And you can call your lender to just find out. So in the old days, like I said, they would just plop these papers in front of you, and you really didn't feel that you had the time or the luxury to read all the numbers and try to make sense of it. So, side benefit of getting those numbers ahead of time. So, ton of information, and it's heavy stuff. It's not exciting, but it's not hard, and we can all pick through it and make it make sense. So I think when a buyer is building a team of people to help them, they should interview a lender like yourself or a mortgage person and see if you guys speak the same language. Because if a buyer doesn't feel that that they're getting the attention or the answers then maybe that's not the right connection. And that's where I think you and your role and is so valuable, is because
Thank you.
You're willing to take the time, you're willing to make sure. But I also want my buyers, if you don't understand, if it's not making, because we speak our own language that we understand and maybe is French to you. So if you feel that you don't understand, stop the person and ask them. And from realtor to home inspector to insurance agent to housing counselor to mortgage lender, stop people and say, I need to understand, because I'm the one that's on the hook here. So don't be afraid, or work on bravado to stop people and make sure they explain, so that you have a better understanding. So and again, Ted, I think that's where your style and your experience is well worth it.
Oh, thank you. No, I don't hesitate either. I know Jonathan knows this. If I'm working with a family and I know my program isn't best for you, there have been many times when I'll say, look, I'm going to send you over to to this people, because I know they can work with you better based on your scenario that you're doing. Because when you're doing this, our job is to get people in homes. And while Huntington has great programs, there are some occasions where it doesn't fit for somebody. And I'll be one of the first ones that, I want to get you in that house. Naturally, I want to do the mortgage, but if it isn't me, let's get you in the house first, and then we can do something for you down the road, hopefully.
Try to get a checking account later on. So
correct.
Jason, are there any questions that came over by chance, or?
Yeah, that's just what I was about to ask. I think Shell is on the call, and Shell, if you have any questions, go ahead and jump in now.
I was a little confused about the homeowners insurance. That's something you have to pay when you don't have the 20% to put down, right?
The homeowners insurance protects the house. The private mortgage insurance is when you don't have 20% down on a conventional loan.
That's right.
Okay, on a conventional loan, and it's usually 20%, right?
Correct. Yeah. You would not need it if you had a 20% down payment on a conventional loan. You would not need it, but on FHA, all FHA loans require it regardless.
And your homeowner's insurance, Shell, would cover you from fire, theft, someone slips on your sidewalk. So that's something you set up with Allstate or State Farm, your company, to protect you with that. So that's going to cover the dwelling and then any activities that go. And that's someone that you shop. That's someone that you go out and then your mortgage pays that every year. So it's your company, but every year the mortgage company will send out the payment to keep that current. So mortgage insurance protects the lender on title issues, and homeowners insurance is going to protect the home and you from fire, theft, slip and fall.
Okay, and the mortgage insurance, that stops when you pay 80% of the loan,
20%.
20%?
Yeah, well, you get 20% down, yes.
Equity.
Correct, on a conventional loan, not
On a
FHA.
conventional loan, right?
Yeah.
So if you were to borrow 100,000, Shell, when you hit that $80,000 mark, then that
Mhm.
mortgage insurance premium should go away.
And the only way that you can get around that is if, I guess, can you have your house appraised?
You know what, that's a great question, because there are many times where somebody will buy a home, sales price was $100,000, it appraised out at 120.
Mhm.
Initially, the lender has to work off the lower of the sales price or the appraised value. Typically, private mortgage insurance companies usually require that you have that mortgage insurance on there for 2 years. And then if you make all your payments on time, say that 20% equity is there, they may ask you to pay for a new appraisal. So you have to stay in touch with your lender. But many times, after that 2-year period, if you've made your payments on time and there's 20% equity, they can eliminate that for you. So very good question.
And on a conventional loan, what's the amount that you say if you don't have the 20%, should you save $10,000 at the very least for a conventional loan?
No, I think the nice part about this example that I gave here in this particular situation was, and again, that's why it's so important to talk to your lenders, because this girl ended up, nothing wrong with saving 10,000, that would be great. But this young lady needed less than $2,000 to get into this house.
I saw that. Yeah.
Now
Again,
that required the seller to pick up 5,100. So we're really talking about, $7,000. So Shell, I tell people 10%, whatever you want to buy, you should save 10% of the purchase price to kind of get started. And again, that's a lie, because in Ted's case, which is a real case, she walked in at $1,400, but because there was seller participation is what really moved the needle on that one.
in a specialty program as well. So, I mean, that's not every scenario.
Yep.
Right. In this climate, or sellers putting that money in for the
Yes.
for the
For the closing costs.
for the closing costs. They're not doing that right now, right? Are they?
Well, you know what? It's another great question. You have some great questions. It's very interesting, because what we're seeing right now is people coming in, say that we're asking 100 and you want to get 5% seller concession. What we see happening is people come in and they'll say, well, I'll offer you 105,000, and I'd like you to pay $5,000 toward my closing costs. And if they can make that all work, that's great. But the property does have to appraise out at 105. And basically right now, there's situations where it happens and there's situations where it doesn't.
Yeah. If two competing offers come in and one's asking for assistance and one's not, I really can't blame the seller, but I would probably go with not offering assistance. So yeah, we are in an unusual period, and it's so interesting that Pittsburgh's slow and everything. That finally we've got to a place where we get multiple offers, and the market is pretty hot. So yeah, I would agree with you, Shelley. It's less common now than maybe it has been in the past.
Agree.
So this is a seller's market, not a buyer's market right now.
Absolutely.
Yes.
If your grandma's selling her home, this is the time for her to do it.
So my situation is I'm looking to buy in the next 2 years, but I'm just trying to get as much information as I possibly can right now. And I'm doing things like fixing my credit. I should be able to go, as soon as we get vaccinated, I should be able to go back to work here, I'm assuming sometime soon.
Good.
So my question is that I have a student loan, and my student loan is no longer on my credit report, but I heard there's something called Cavers, and it's still, and they run that now. So I was thinking that my best bet would be a conventional loan and not an FHA loan. So my credit score right now is 718.
Very good.
So I'm trying to get that to about a 740 to get the best that I can get. And I
Yes.
would assume like within the next year, I should be around a 740.
So I'm going to invite you to do the next home buyer club. So get your material ready. We'll have you come in next month.
You do the lender side too. No, that's great. A great part. You're doing a great job. So keep going the direction you are. I worry sometimes about the, and you're right about the cavers showing up on the FHA loans. I've had situations where it doesn't show up on the credit report, even on a conventional loan. But as these banks get more savvy in checking things, especially when they're government student loans, that could pop up and bite you.
So that would be for VAs, USDA, and FHA loans, Ted. So that's a government check. They're checking things like taxes and government student loans, maybe Social Security information would all be checked through the Caver system. Is that my understanding?
That is correct.
Okay.
Yes. And some portfolio loans do it as well.
Okay. All right, great.
Okay, I think that's all the questions I have.
Keep learning.
Good.
I mean, you're
Doing a great job.
Yeah, thank you, Shell. I don't know that we have any other questions. I don't see any other questions that have come in from Facebook.
Well, it's been an hour, Ted. It goes by so fast. And,
It does.
There's tons of other things we could cover, but we are grateful. I'm grateful that you share your knowledge so freely and willingly to everybody. And this will be out on, Jason, this will be something that people can search later on, right? So they'll be able to find Ted. Do you have a phone number or anything, Ted, that you want to leave before we go?
Yeah, the best number I leave is my cell phone, and it's 724-622-4162. And yeah, I mean, that's my cell, so you could call or text if you have questions. I'll get back to you as quickly as I can, but I really appreciate all of you taking time out of your busy schedules to share an hour with me, because I think it's, the information that you walk out of here with, many people, they may have even bought a home and don't know all this. So you're ahead of the game, and keep doing what you're doing. Anything I can do to help, always feel free to reach out.
Okay, I just want to make sure I have your number down correct. That's 724-622-4162.
That is correct.
Okay. Money's in the mail, Shell. Money's in the mail.
Thanks.
Appreciate you. Thank you, Ted, George. Appreciate you. And
All right, guys. Thank you, Jonathan.
Helping
Have a great evening. All right.
All right, thank you
both.
guys so much.
Thanks, Shell.
Bye.
Okay, folks, I think that's it. I guess that's just me and you now, Jonathan.
Thanks, Jason. I appreciate you staying up and helping me with this.
No problem. I need to go see what's blowing up on my email now
Have fun.
and on Twitter. Yeah, thanks. Bye.
Good day.